as well. But you also have individual stock-specific news flow that we want to track. Apurva Prasad, who's a research analyst at HDFC Securities, joins us now. Apurva, first I want to ask you what's happening with Infosys. There are several resignations. You know, earlier it was Ravi Kumar, now Mohit Joshi has stepped down. That's raising a bit of concerns about, you know, what's happening with the management itself and how they could wade through what seems to be a challenging time now with an impending recession. On the stock itself, your view?
Good morning, Sonia. Thanks for having me.
Morning.
So yes, I think they're going through a bit of a transition. However, it's not unusual. We've seen enough in more instances, you know, of similar transitions in the past. So while there could be some near-term, transition-related factors that may have an impact, but I mean, if you look at the deal flow more recently, that continues to be fairly strong. And if you look at where valuations are, since you asked from a stock point of view, I think they're almost near the long-term averages. I think the absolute return potential, in my opinion, should be good for Infosys.
Okay, Apurva, hi. Good morning to you. A slightly wider question. We were discussing this with our earlier guest as well. How should investors look at IT stocks? On one hand, they were anyway battered and bruised over the last 12 months. So there would be some, sort of reason to perhaps bottom fish. But now you're getting this onslaught of headlines from the US. Is this a good time to dabble in? If yes, what kind of companies? Stay away? What's the advice?
It's quite interesting. So you're looking at a peculiar scenario that the terminal growth rate probably headed lower. You have the terminal rate, which is headed lower, the terminal growth rate, which is intact, and probably the near-term growth rate, which carries some amount of risk. So BFSI, in any case, there were some sub-segments where there was cuts in spend, which is particular to mortgage. It seems that could probably expand to some of the smaller and mid-sized banks, which are customers. But case in point out here being that on the medium-term technology transformation spend agenda, those are unaffected. So of course there is a rationalization of spend and projects which are being preferred, which have higher ROIs, those continue. But at the same time, I think the medium-term agenda on tech spend trends, those are unchanged. So I think if you put all these three elements together, I think that's a good way to look at it. And in the context that, with where valuations are relative to where it was about 6 to 7 months back, I think that looks a lot more favorable. So I think we're being a bit selective out here while we are constructive. But I think there are some stocks that offer good absolute return potential.
Making this a bit macro-ish, Apurva, if I can, have you looked at how IT stocks, do IT stocks have any correlation over long periods of time with US interest rates? I'm just asking that because if we've seen some really massive moves and in the US 2-year, 10-year, etc., which, and some are saying, well, this is reminiscent of 2018. Back then, the 5-year peaked, made a high, and then we had a big reversal down, and then we had the last Fed rate hike after that. Of course, so people are drawing parallels. If that were to play out, you think, is there a correlation with US interest rates for Indian IT?
Interest rates, yes, Prashant, most certainly on some of the sub-segments within the portfolio. So like I was mentioning earlier, mortgages most certainly, those are down. The volumes are certainly down, and that does have a bearing. But if you see in terms of, if you expand that, sort of zoom out and look at the last time there was a contagion and what happened, especially in the BFSI vertical, that took them about a couple of quarters to really get back. So the impact was probably prolonged for about a quarter and a half. That's the amount of impact that it took. Environment was very different back then. Most of the larger companies were 1/4 the size of where they are today. And I think, the element out here is that a lot of spend has become more non-discretionary. So essentially digital being more non-discretionary, while historically you would have very high correlation with how the macros have played out. So whether you correlate it with the nominal GDP or the real GDP, I think essentially the fact that more recently when you had instances of slowdown, we saw that bit of a disconnect, and I think that's likely to continue. And which is why you may look at a classic scenario that there would be instances of deferrals of deals. There may be instances of the bookings not converting to revenue.
Sure.
But at the same time, the offset is going to be pipeline expansion with cost optimization deals. So there are a lot more cost optimization deals that have been flowing through. I mean, you just have to look at the BFSI deals that TCS has reported or published the past couple of months. So I think the deal activity continues to be fairly strong. The nature of deals would probably change,
Got
and I
it.
think that's what's going to continue.
Okay, got it. Apurva, we will, of course, have a lengthier discussion at another time. But for now, thanks a lot for joining in and have a great day. We're heading into market opening, which looks like it's going to be a